Good morning, Master Traders. This is Dan and Greg in the green trading room, and we just wanted to analyze this trade that we just gave a recommendation on, a bearish trade on Western Digital WDC, and it's based upon multiple time frames being in alignment bearish. And then we're going to talk to you about, possible use of oscillators or lack thereof and why they're so misleading, particularly in a setup like this. So we found this gap trade in our pre-market gap scans, and it's because of earnings. So we're always monitoring earnings gaps also for us to trade both income and directional trades in the Master Trader Green Room and for our subscribers. Let's start with the daily chart here, bottom left. This is in a downtrend. Lower lows, lower highs, all three declining major moving averages, 20, 50, 200. A bearish gap under a green bar, under major support with nothing to the left. Bottom right, my weekly chart. Nasty sell-off, so this is what we call a big old shakeout, a bearish upside breakout failure. Lower lows, lower highs. It was struggling here on the 200 moving averages, and it's breaking down from 1, 2, 3, 4, 5 areas of major support. It's a breakdown. Monthly, you can see that topping tail is this shakeout here, and it's breaking down with what we call a price void, meaning look at all these football players, this congestion of resistance. Once it breaks down, it's resistance. If it broke out, then the bottom is support. But because of this fluid move up, this rapid monthly advance, there's not much to the left for this thing to make a big move down. This stock could easily come down to the low 60s here. I mean, we're in trade management mode now. So this was an excellent setup. We recommended on this small little bounce here this morning on the upper left here, 5-minute chart. Recommended selling an out-of-the-money bear call credit spread. And in retrospect, I regret not giving a directional, just short the stock right here under that 5-minute bars low. But we're still watching this for a short. So a question came up from one of our members right now, and that's what I'd like Greg to elaborate on anything I just said, but in particular the following. We had one subscriber say, hey, it's WDC just broke past the lower Bollinger Band. It's never done that in a whole year. So doesn't that mean it's oversold? Should we have a bullish bias? And Greg has done many, many, many educational lessons on the use of oscillators and, the incorrect use of them. So Greg, take it over and give us your thoughts on what this individual said and using these charts.
Oh, one thing that you said, Dan, the correct use. There is no correct use of them because they shouldn't be used at all. Just misleading information. And while a Bollinger Band is some measurement of volatility, common sense is not being used with these indicators, meaning if you look at the WDC daily chart, that was going sideways for a month and it broke down. So it actually ignited a move, gapping below a base and a wide range green bar the prior day. There's nothing to the left there. You can see that, well, on the monthly chart, you see that little bottoming tail over there. There's a little tiny bit of support. However, you have all of that consolidation overhead. So, who's going to win the battle? That big base that it's breaking down from or that tiny little tail? It's an extremely bearish pattern. And, putting a trend line, a Bollinger Band, an envelope, and of course an oscillator is just meaningless to stopping this from going down. It's a bearish pattern, and those indicators or trend following tools or volatility tools, they just mislead, and it's a vicious black hole that everybody falls into at the beginning because you're inundated with the use of them Because as you open up your trading platform, that's what you see. And so, there's just, unless you find your way here and with an open mind to say, you know what, this seems like common sense, that the use of these things don't make sense. But the great thing about it for Brian is that he's been using that. He is here, and now he sees how it was meaningless, the use of that band. So again, if you learn how to read price action, price voids, relative strength and weakness, what's happening in the markets and so on, and sectors, and these gaps and how they gap from, you just free yourself from that type of information that leads you to beliefs that are not in alignment with reality.
Happy trading.